Thank you for joining me this Friday, the 15th of September. I'm Grady Wolf, market analyst with Bell Direct, and this is the weekly market update. There is no denying that artificial intelligence, or AI, is the phrase and phenomenon of 2023, paving the way for the hyper-efficiencies, cost-cutting and overall operational excellence for many years to come across every industry around the world. With the Australian government's latest budget including $101 million to help Aussie businesses adopt AI and quantum tech, the scale of in-house investing in AI is also ramping up across the board. But much like ESG investing, there's a clear difference between saying you're investing in and adopting AI and actually making meaningful steps to take action on an AI front. This reporting season, we saw many companies cut dividends in favour of reinvesting profits into technological advancements and AI. But let's dive into which companies have actually acted versus those who are merely talking the talk in a bid to join the AI hype bandwagon. With a goal of hitting $1 billion in annual sales over the next 3 to 5 years, Temple & Webster have AI in their sights and investment strategy to help hit the target. The online homewares retailer boasts no debt and a strong cash balance while focusing heavily on AI investment through investing another $2 million into Renovi, an Israeli startup company that is AI-focused and digitizes interior design. Temple & Webster has also increased its number of software engineers, product managers and data scientists to introduce AI across all customer interactions, from live chat to product descriptions and more. The aim of their AI strategy is to drive productivity growth whilst cutting operational costs. WiseTech Global is another example of a company leading the way through AI investment after the leading logistics solutions provider acquired Shipamax in November 2022. Shipamax is an industry-leading provider of data entry automation software for the logistics industry. The acquisition improves data entry processing for WiseTech, reduces the risk of incorrectly entered data, reduces time and resource effort, and reduces costs associated with data exchange. Now, Coles Group has been experimenting with ChatGPT, and Coles Liquor is utilising Relex solutions to forecast demand and automate stock replenishments to ensure shelves never run empty. The supermarket giant was an early adopter of predictive AI through the Relex solution integration announced back in April 2022. Coles has ramped up its spend in technology to streamline production and processes from $809 million in 2022 to $1 billion in 2023. A mining-focused technology company leading the way with AI integration for exploration is Sensor, through its AI-enhanced targeting and prospectivity mapping services. Sensor is backed by iron ore giant BHP and aims to become the top-performing minerals targeting company globally. The company's AI software works by applying integrated AI and machine learning algorithms to a large geoscience data cube to find the digital fingerprints and predict the location of mineral deposits in 3 core steps: training, prediction and target analysis. Now, lithium darling Pilbara Minerals is leading the AI race in the lithium sector through utilising PlotLogic's OreSense AI technology at its Pilgangoora operations to increase production and reduce dilution with less ore going to waste. The OreSense technology ensures hyper-efficiency in sorting the minerals mined at the PLS operations. Some listed companies are just in the early foundations of investing in and integrating AI solutions into operations, which may prove very challenging to keep up with competition if they don't act and invest more in the near term. When investing in AI-themed stocks, there is also an alternative view to consider. Why not invest in the physical data centres and warehouses that are home to the hardware required for major cloud services? Goodman Group is one property company that is capitalising on the rising demand for AI through building 3 to 4 gigawatts worth of global data centres over the next decade. Locally, from Monday to Thursday, the ASX 200 rose 0.42%, buoyed by the finance sector adding 1.53% and material stocks lifting 1.31%. And that's on strength in the price of iron ore as China released some very favourable economic data, signalling recovery is well underway in the region. The winning stocks over the 4 trading days were led by Coronado Global Resources, rising 10.09% on strength in the price of coal, while Champion Iron rose 7.73% amid the rising price of iron ore, and Link Administration Holdings added 6.23%. On the losing end, Sims fell 10.63%, Chalice Mining extended its losing run, falling 10.61%, and Viva Energy lost 9.55% over the 4 trading days. Taking a look at the broader market, the All Ords added 0.33% over this week, led by Predictive Discovery, rising 15.38%, while Atlantic Lithium rose 12.5%, and Bowen Coking Coal lifted 12%. AMA Group weighed on the All Ords though, losing 20%, while Terracom fell 18.1%, and Renascor Resources fell 17.86%. The most traded stocks by Bell Direct clients from Monday to Thursday were BHP, Hub24, Viva Energy, Wesfarmers, Macquarie Group, Seven Group Holdings, and News Corporation. Clients also bought into Qantas while taking profits from Treasury Wine Estates and ResMed. And on the most traded ETFs front, and they were led by BetaShares Australian Top 20 Equity Yield Maximizer Fund, BetaShares Australian High Interest Cash ETF, and BetaShares Australian Quality ETF. Taking a look at the week ahead, the RBA's latest meeting minutes will be released on Tuesday, which will give investors an insight into the rate outlook from Australia's central bank. Overseas, UK inflation data, is out on Wednesday, while the Fed's interest rate decision for the US is announced on Thursday, with the expectation of the Fed to maintain the cash rate at 5.25% to 5.5% for the month ahead. The Bank of Japan is also announcing the Japanese rate decision on Friday, which will be interesting to see if the Japanese central bank maintains the minus 0.1% cash rate for another month. And that's all we have time for today. Have a wonderful Friday, a fantastic weekend, and as always, happy investing.